Haining, we've seen a dramatic escalation in the trade tensions between U.S. and China over the last couple of weeks. What do all these moves between the U.S. and China mean, and what impact could that have on the global economy and markets going forward?
I think the market is feeling quite nervous about the recent escalation of trade war. We agree it is a clear negative, but we think the actual impact is actually more manageable than what markets feared. I think before we do the number crunching, it is important to clarify some misconception. When we mention the headline trade data, for example, the $500 billion U.S. imports from China or $400 billion U.S. trade deficit against China, we are calculating, the numbers are actually calculating the gross value of the goods. That's all fine if we are, in ancient times then, when there is very little international cooperation and all of the productions are done domestically. But that's no longer the case. In a world where the global supply chain are fully integrated, I think it's important to look at the value add breakdown from different countries to measure the true economic impact. One prime example is the Apple iPhone. For example, the iPhone 10 is sold at the price of $1,000, and let's have a breakdown of that, particular product. So out of that $1,000, about $650 are the Apple's profit margin, gross profit margin, and then only $350 are the actual production cost. And within that $350, only less than 5% are actually the value add from China. But in the headline trade stats, actually all 350 are categorized as China's export to the U.S. So if 10% tariff is imposed onto the Apple's products, as you can imagine, it will actually hurt more other countries more than China's.
Because a lot of the value add is coming from other countries as opposed to just China.
Exactly. For example, a lot of the out of that $350, a lot of the components are coming from Korea, Taiwan, or even the U.S.
You mentioned that the 10% tariffs will impact other countries other than China. Is that the case for the last round of tariffs?
That's exactly the case. So according to the IMF's data, in the previous round of tariff hike, almost all of the tariff costs are passed on to the U.S. consumers.
And it was not being absorbed by China, as some were stating.
That's not what the data says. And don't forget, in the previous tranche of $200 billion worth of goods, these $200 billion goods are very carefully calibrated by the U.S. government to avoid impact on U.S. consumers.
We've seen certainly China's currency weaken against the U.S. Do you see this trade war evolving into a currency war? Is there a risk? And what impact could that have on the global economy?
We don't see a full-scale currency war, but we do believe that in the next episode of trade escalation, the currency will be used as a tool to moderate the impact on the global market and global economy.
And staying with currency, this is also the first time that China has been labeled a currency manipulator by the U.S. Now, other than calling China out, are there any actual tangible consequences to this?
Actually, not a whole lot, because according to the U.S. law, once a particular country is designated as currency manipulator, one of several things can happen. Number one, the U.S. government can restrict private investment into that country. And number two, U.S. can restrict the government procurement. And number three, U.S. can basically impose more tariff. So basically 2 and 3 are already happening. And we don't see the first option is doable because it'll be quite damaging for the U.S. multinational corporations. It basically shuts the companies out of one of the largest consumer markets in the world.
What's been the impact of the trade war on investment?
So far from the market peak, S&P dropped 5-6%. We agree that the market is due for a bit of correction, but we are not that pessimistic. And there is some speculation in the market that there could be another trade war version, a Lehman-like meltdown.
And why is that?
We don't believe that's the case, because of the reason I mentioned, that the trade war impact is actually more manageable. And on top of that, when this negative development happens, it actually forced the central bank to do more easing to achieve their mandate.
And when you say manageable, is that manageable by the U.S. or China or both?
I think it's a little bit both. So first of all, as we mentioned before, most of the costs are likely to pass on to the U.S. consumers or absorbed by the U.S. companies. So if it's passed on to the U.S. consumer, 10% on the $300 billion of goods, that's 30 billion extra cost. 30 billion extra costs when divided by the total household consumption, which is around 14 trillion.
It's a drop in the bucket almost.
Yeah, that's basically about 20 basis points impact. And if it's some of them are absorbed by the U.S. companies, for example, S&P 500 companies, their annual earning is about $1.4 trillion. So that's about 2% impact. $30 billion cost is about 2% impact. And don't forget, we mentioned that FX can be used as a tool to manage that impact.
The foreign exchange, yes.
Yeah. So all in all, for sure it's a negative, but we think so far the impact will be more manageable.
So given all of that, where do you see the trade war going forward?
Actually going forward, because the new round of tariff will take effect in September, and after that, there will be probably a 2 to 3 months observation period. And the various parties will observe how people react, how the economy fare under the new tariff. And afterwards, and one easy option for President Trump would be increase the tariff rate from 10% to 25%. At that point, basically 25% tariff will apply onto all Chinese imports. And then afterwards, there will probably another observation period, and then we'll get into the U.S. election season. And from there, I believe the roadmap will be a little bit unclear, but I believe the motivation for negotiation on China's side will probably drop a little bit.
And why is that?
Because essentially you are not sure if you are negotiating with the right people, and if any terms are reached, whether the new government, if there is a new government, will honor the previous agreement. Yeah.
And finally, what are the market risks and opportunities investors should be watching for in terms of the trade war going forward?
Actually, at this point, we see more opportunity than risk.
Why is that?
But the only thing is the price hasn't dropped enough, because before this episode, the year-to-date S&P 500 return is actually more than 20%. And then from the peak, it dropped only 5-6%. And if you look at it on a valuation basis, the U.S. equity is still, compared to historical average, relatively more expensive. So we will just be patient and looking to getting exposure when we are at a good entry point.
Haining, thank you very much for your time.
Thanks for having me.